Felix here, and here are the 5 things you need to know before the market opens today. I am on the road, as you can tell, to a secret destination. If you can guess it, put it in the comments below. And what's number 1? Her Majesty the Queen passed away yesterday, very sadly, and King Charles is the new king. There will be an accession meeting tomorrow where he gets officially proclaimed king. And quite interestingly, one of the groups of people who will be present at that is the City of London, which just goes to show how important the financial industry is to the fabric of the United Kingdom. But yeah, very, very sad day, an enormous tragic loss, and a real woman of long-term vision. And I think there's something we can learn from that. Look beyond the short-term woes and really focus on where you want to go in the long run. The dollar is dropping on a less kind of monumental note here. Why? Well, the market is basically pricing in the European interest rate hike and Japan possibly following in its footsteps. Energy is the next big story. California basically might be cutting off power to 50,000 homes, while the Europeans are squabbling about how to cap gas prices for the Russians and everybody else. And it's an interesting place as a customer if you want to cap the price your supplier sets. I'd like to see how that works. My economics degree did not prepare me for such eventuality. Talking of rates, the US Treasury rates, so the amount of interest essentially, or yield rather, that US Treasuries are paying, are going up the fastest rate like ever in decades. And what does that say? Well, it says that the market is really pricing in this recession that we're allegedly not in yet. At the same time, the stock market's looking nice and bright and green today, bushy-eyed and even. Why? Because the market's kind of thinking, well, I think we've probably priced in the rate hikes that are coming. We kind of know what's happening now. Chair Powell said exactly what we thought he was going to say yesterday. Basically, yeah, we're going to keep raising rates and we're going to keep them up higher for longer. If you watch me on that live stream, you already know that. So, good news or bad news? Well, I think it looks like one of those green days at the end of the week, which we are getting quite a lot of. But remember, last Friday, there was a 2% change intraday between the high and the low. So markets can turn incredibly, and volatility is just here to stay. It's just going to stick around till all of this madness is solved and we really know where the economy is heading. And until then, we continue to make lots of money with volatility trading. How do we do that? Well, we do that by selling options, and you know how to do that. The links are down below. And I wish you a beautiful day. I will be reporting from where I am going. So, you know, your guess is what I want to hear. Put it in the comments. Thanks.